Hello, everybody, and welcome to today's Friday episode of Trade the Chain. It is July 22nd. Thank you very much for stopping by. We always enjoy it. That way, we're not talking to ourselves. I am joined by Trade the Chain's everyday guy, Doug DeRosa, who's having some technical difficulties because of a heat wave in the Northeast. So if you see him eviscerated in a fireball, we'll fill you into what happened to him later. And then in Trade the Chain's Director of Research and Chief Community Officer, Nick Mancini. So thanks everybody for coming. Really appreciate it. I'm gonna plug Nick's show again today because he just got off it a short time ago. If you not subscribed to Trade the Chain's YouTube channel, please go over there and do so and smash the like. He is dropping the nuggets of knowledge for 15 minutes every midday, Monday through Friday. So very important stuff, more important than anything Doug and I have to actually say. Nick, are we smiles or frowns on this Friday? What's going on?
It's a really rough Friday for the markets. S&P tried to break higher. So the overnight, I guess in the end of the morning, we had basically the dollar nearly came out of the range. S&P, let me zoom out a little bit here, nearly broke out of its range. So we had a very, very fantastic fake out for any of the bulls. That has sent us really careening back down to support, and really the lower end of this trading range is hoping to hold solid, or else we're going to probably head lower. And then that obviously took Bitcoin with it as well. So a lot of the chances of hope were dashed this morning, I think, by the dollar, and continue to be as it climbs back into this range that we discussed. I mean, it really came out for quite some time too, and now it's coming back in. So really some topsy-turviness to the markets right now. And we do not want to see an S&P close like this. This gives a lot of credence to those calling for 360 and 340 SPY if we close this poorly. And I don't think anyone has been expecting that, and that's could be why it occurs. The bullish trade may have been a little bit crowded. Well, obviously was, and now we've come off the high. So the tricky part of the weekend is obviously this will not trade. Where we close will be very important in an hour and 45 minutes. And then Bitcoin will roam free without any influence from the dollar and from S&P. So, we're more than likely to kind of hang out in this range to some degree. And then, either break higher or move lower. But I think guess is as good as mine is where we head. I did not expect such a strong rejection off of the highs for the S&P today, to be honest with you. That I didn't expect it to crush right through 4K, but I definitely expected some consolidation and a rise higher. So to see us get slapped back is a bit worrisome, to be honest with you.
Okay, interesting. Not really positive for the markets right now, but it's been turbulent for the past week.
No, I agree. And, there's a scenario where we could see 23 and then back down here and then head higher. That would kind of complete, a little bit of a lower time frame bull flag. So I think, that'd be nice to see. But other than that, we're basically probably just going to hang out in this range until something happens. And that's something, if we close a little bit ugly on the S&P, you have to wonder if crypto is going to fly over the weekend or if it's just going to kind of chop around and consolidate. So it's a difficult question. Usually we've had pretty good clarity going into the weekend, and we've had some bullish weekends. Typically, actually, like even during the bear run, we had, we would typically see some relief over the weekend. So that's why it wouldn't shock me, but it's tough to bet on when you're staring at the chart that we have on the screen right now.
All right. Okay. Well, here we go. We're still at about $1.04 trillion in the market space for the total market cap of crypto. Sentiment for the overall market is 48 out of 100, still staying neutral. Bitcoin daily sentiment is 47 out of 100, neutral as well. And Ethereum the same way, 51 out of 100. So very sideways sentiment. And this has been the theme for the last week and a half. Although I will say that we did have one day of really bearish daily sentiment in Bitcoin. I saw it dip down to 8 out of 100, which I've never seen it do before. But we've seemed to stabilize. Hottest on Twitter, we got Alpha Finance leading the way, up 653% in social media value. And one of those, Bitcoin Gold, BTG, up 22.52% in price action. GNY leading the top gainers with 27.09. And Alpha, which is leading on the social media Twitter charts, is the reason it's leading is not for very good reason. It's actually the most bearish of the coins, down for the daily sentiment. So interesting stuff. The overall market seems to be right about neutral, few up, few down, not by many percentage points. So we're still hanging tight with the sideways range-bound trade, but that range is actually really volatile. So to Nick's point, if you're an intraday trader and you're looking for scalps, it's been a difficult pond to fish in, so to speak, so far. So interesting stuff, but we're working through it. We had Twitter earnings come out, which did drive the market down a little as they missed their earnings, just like the Tesla earnings. Bad news of Elon selling $1 billion in Bitcoin, also disturbing the market as well. What we're going to dive into is what everybody is really jumping up and down with on Twitter today, and that is, well, not that article. It would be that article. 3 Hours Capital founders have emerged in the press. And I have to be honest with you. I didn't pull up the original Bloomberg story here. You can find it online. This is Decrypt's take. But it was fascinating. And it wasn't fascinating because of how insightful it was. It was fascinating because of how amateurish the two spoke, their interactions with the journalists. I don't know if either of you felt that way too, but there was a lot of ums and does and stuff like that. It really kind of stunk, to be honest with you.
They spoke like hipsters.
They really did, like they're from Williamsburg. Nothing against people from Williamsburg.
But. My favorite part was where he said that he lived a modest life because he took his bike to the marina where his yacht was moored, and he had only 2 houses in Singapore. So that was very amusing to hear him try to gain some sympathy for only having 2 houses and riding a bike to his yacht.
A lot of people don't have one house, so. But
or,
here
or
you can,
yacht, you know, I think like if you would have rode your Maserati to your rowboat, I think that would have been better than saying you ride your bike to your or to your yacht. You know what I'm saying? So.
Yeah, I think reality is a little warped for them right now. I don't know. It's crazy. Suzu, Kyle Davies, they're basically blaming the fund's collapse to overexposure to Terra, S.E.C, ETH, and Grayscale's Bitcoin Trust. It's funny that they're blaming their overexposure. I wonder where the risk controls were when they were making those bets. But Zhu goes on to say initially they didn't see any red flags. What they failed to really realize was the fact that Luna was capable of falling to effectively zero in a matter of days. Now, let me ask you folks this. We're in crypto. Who has the expectation that nothing could possibly fall to zero? These are professionals, self-proclaimed professionals.
Well, this is what a bull market does, though, right? It makes people think that they're genius when they're not, right? There were red flags. They admitted that. They blew those off, right? They trusted one guy who seemed a little bit shady, but they're like, hey, he seems legit, right? Let's go with him. And again, it made them look really good on the upside until things flipped. And then they're like, oh, crap, we should have probably looked at those red flags and that guy really wasn't a genius, right? So a rising market makes everybody look smart, and made these guys
totally. And they made it sound like Taekwondo there, Do Kwon, that they he moved to Singapore, they met him in a bar and then threw billions after him. I'm pretty sure that's not a great investment committee thesis or process.
No, that would be enough to scare any person who is privy to that knowledge away for quite a long time.
The good news is though, Alex, they said they have a money trail for the yacht, so they did pay for that. So that's good news.
They said it. Well, they said that because they said it's legit. Everybody was telling them that they absconded with, you know, whatever the down payment was for this this $50 million yacht. Which, by the way, I mean, I'm a boat guy. I got a boat. You know how much boat $50 million buys? I mean, you should see the size of the this crypto guy's boat parked next to my boat down here. He paid 13 million. This boat's the size of a small condo complex. All right. So I don't know what the hell $50 million is getting you. It's like the Titanic. But you know, again, in the purple here on the screen, the article, they didn't realize Luna could fall to zero in a matter of days, which is just absurd. Anything crypto can fall to zero, and that it would be a catalyst for a credit squeeze across the industry. How do you not realize that when you're the one borrowing?
You were the one getting squeezed.
That's the credit right there, is you borrowing the billions to bet on something that is going to zero from a bunch of counterparties. So you have no idea about the terminology systemic risk, I presume. I have no words.
And the funny thing was, people thought they were the adults in the room, right? And there clearly weren't the adults in the room. So
there were the greedy ones in the room. I mean, they're 35. Now, you know, one of the things I really got kind of enlightened by during reading the Bloomberg article too was, you know, one of their exposures that they realized was part of their fall was their grayscale, the GBTC position that they took. Now, a little background on GBTC position. One, they were the largest holders of GBTC in the world from Grayscale. Okay. They initially got into it because of the arbitrage between GBTC shares and spot price on Bitcoin. And for those of you who don't know how that works, Grayscale's Bitcoin Trust issued shares publicly, traded, and there was a premium on it, meaning that you could buy them and literally they were worth more than the underlying asset that was supporting it. Well, in the article, they say, you know, one of the things that ruined the arbitrage in that play was people started copying us. And so the premium started dwindling. And then the premium went into a negative coupon rate. So the asset actually became more, their arbitrage reversed, and it became a negative value holding. Again, I'm saying the three guys here, two of them being, you know, tumbleweeds on a road, me and Doug, and Nick with half a head on his shoulders, who's smarter than us. As an investment committee, if we saw an arbitrage opportunity contracting on a publicly traded asset, how long would we hold that until we realized we were 30% underwater?
I mean, you would hope that they would take profits at the top and then basically set a limit to where if it reaches even, then they just break out. That's typically how you would make an intelligent trade. But I mean, as soon as it hits 0%, I'd be out because all your value is gone. You know, and they let it sit to 30, which is absurd. With what number of money? 9 figures, you know, worth of goods, you know, in that scenario, which is absolutely insane.
Yep. So I think we figured out two of these reasons on the collapse of 3 Arrows Capital. One is the overexposure to Terra. They got drunk, met Taekwondo in a bar, and put millions of borrowed money after. Okay, that was mistake number one. Alcohol will do it every single time, trust me. And then two, the Grayscale Bitcoin Trust sliding from a positive arbitrage coupon to a negative one. I think it's, I don't know the real reason behind that, but maybe they forgot they owned $1 billion. They didn't check the charts every day to see the price depreciating. But yeah, it doesn't sound like a bunch of smart guys. Let's move on to this. If you guys were well, yesterday we covered it. We had the was it yesterday or the day before the insider trading charges at Coinbase?
Yesterday.
Yesterday. Okay, so the SEC came down hard on a product manager over Coinbase for insider trading, basically front running listings that he knew Coinbase would be putting up on the exchange. But the SEC also in the same statement mentioned that 7 assets that they traded at Coinbase were listed as securities. Now, this is big news to Coinbase because, one, they're not supposed to be listing securities. And two, this is what I find interesting. Well, here's a quote from the chief legal officer at Coinbase. Coinbase does not list securities, end of story. Okay, there's a statement. Coinbase has a rigorous process to analyze and review each digital asset before making it available on the exchange, a process the SEC itself has reviewed. I don't know what's going to come out with this, but are they approved a process for review that Coinbase has done? Coinbase has listed assets for certain lengths of time. Is the SEC now going to come down and, after the fact for these guys? I mean, what's everybody's take?
I mean, fortunately, they were, they're low volume, kind of weird projects to begin with. So, I mean, I'm hoping that, with the assets likely being taken off the platform, it doesn't hurt anybody. But it is a bit odd. The SEC seems to be trying to play both sides of the fence at all times. We're here to help, but we're going to make really weird rules, and then we're going to kind of go back on the agreements or whatever kind of we had agreed on before, whatever that is. So it doesn't seem, I don't think this is helpful. So like charging someone for insider trading, helpful, because you should not be doing that in the first place. But then like retroactively going back on, whatever kind of deal you had with the company, that just because it somehow surrounds this scenario is very probably annoying and cumbersome for the market. I don't think this is entirely impactful for price action or anything like that. But I would not imagine being an exchange operator and looking and being also a retail participant looking down the road and being like, hey, this is, I'm glad the SEC has done this the way that they have, if Coinbase is telling the truth, of course. So like, it doesn't inspire me in terms of the SEC being a helpful counterparty in the industry when we eventually need some sort of guardrails to grow. And if they're just going to kind of create arbitrary rules and go back on their agreements, then that doesn't seem helpful, in my opinion. But I don't know what the exact impact is going to be long term, because I mean, obviously, clearly they had the opportunity to name a litany of other asset securities that could have had a much bigger market impact, and they didn't. So you have to wonder where this is mitigated, where the buck stops for this situation.
I was just going to say that, Nick, that they probably use, or I think they use the Howey test. So for those 18 that they didn't determine to be a security, like what was the defining, criteria, right? And now are they going to go through every listing? And then is every exchange going to do that now? Like, oh crap, is the SEC going to be up our butts, right? So yeah, I'm sure a lot of exchanges right now are probably scrambling because they don't want the SEC in their stuff. So.
Yeah, and this is also a cautionary tale of what we've mentioned. A lot of people in the industry have mentioned where the SEC has kind of positioned themselves against the wall to do regulation through enforcement, and that is the opposite of what we want, and it's the opposite of what the right thing to do is, and that's been mentioned many times in Washington, D.C. The SEC cannot and should not provide regulation through enforcement. That's no good for anybody.
And it's widely known now, it's in financial securities that the SEC shoots first and then asks questions later, right? So they don't really take take their time to research something. They'll just say, all righty, you're fined, you're violated, you're censured, whatever it is. And then they worry about the ramifications kind of afterwards. So
correct. And they do that because they're obviously, they're the 800-pound gorilla in the room. They're there to protect investors, the general public. But also there is there's a conflict of interest. Many people have felt this. Their complete operating budget each year is made up of fines collected. So think about that for a moment when it comes to conflict of interest, right? Not going to say any more, but it's disheartening. Anyway, that being said, folks, we hope you have a great weekend. We hope the weather is beautiful wherever you are. We know there's a lot of roads and airstrips that are melting around the world right now because of heat. We hope you're not on one of them. That being said, we will see you Monday. Tune in to Nick Monday midday, like he does every day, Monday through Friday, for the daily markets report. And hang on to your handlebars. We will see you next week, and go have fun. Just get outside. Later, folks.